quick update on Applied Materials after they had their Q4 earnings report. Before we jump into that, just want to remind you to like this video, hit the subscribe button, and if you want up-to-date daily information on stocks we cover, check out our Semiconductor Insider membership, link in the description below. The market wasn't so happy with Applied Materials after their Q4 fiscal 2024 update in November. What happened?
CEO Gary Dickerson talked about on the earnings call the multiple tailwinds for Applied right now being driven by things like AI. And because of the massive amount of energy consumption for some of these AI models, why energy efficient computing is going to be a 15-year timeline to gradual incremental improvement. Applied helps with logic chips, memory chips, and is actually the leader in advanced packaging equipment.
A lot of growth clearly happened last year, but there were some obvious areas of weakness that led to basically flat fiscal year 2024 revenue. Why is that, Nick?
Yeah, Applied's CFO, Bryce Hill, broke it down for us on the earnings call. An increase in advanced foundry logic, so that would be companies like Taiwan Semi Manufacturing, and Applied Global Services. So think of that as software services as well as some fab services they provide their customers, like maybe moving equipment around or setting up new equipment. The takes that negatively impacted Applied Materials were DRAM sales. Those were down year over year in fiscal year 2024. No surprise there. And then ICAPS, the auto, industrial, communications, power, and sensors part of the portfolio. After new records in 2023, that segment also declined. Applied did generate new record revenue for this year, but let's not forget, overall, the semiconductor industry is still just pulling out of a down cycle.
So how is this translating into financial performance, you might ask? We have to ask ourselves, what has Applied Materials really been doing for us lately? To answer, we need to zoom out a bit, compare AMAT to the other two big generalists in the Fab Five, Lam Research and Tokyo Electron. Applied Materials has massively outperformed during the fab equipment spending downturn of the last couple of years. So what about the guidance for 2025?
There's a lot of media commentary that Applied's guidance missed expectations. Applied's Q1 fiscal year 2025, which corresponds actually mostly to the fourth quarter of 2024. Applied guided for 8% year-over-year growth in equipment sales, the bulk of their business, and another 12% increase year-over-year in that Applied Global Services. These are very good numbers for a company that is dealing with what is still a very sluggish and cautious fab equipment spending portion of the semiconductor industry.
For the last year or so, we had generally ranked AMAT as a hold, but after the recent pullback in the semi industry on the cusp of a new growth cycle, we've been progressively warming back up to Applied Materials, and we rank this as a buy once more. Of course, this isn't the fastest growing fab equipment play, and it's more suited for investors looking for more gradual growth and some dividend income. We aren't buyers, but it's because we already have a full position.
This was our first fab equipment investment many years ago. We are very happy to continue holding this one for the long term.